Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, June 3rd, 5:22 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Daily Market Insight video. Market state, we're in an uptrend, a weak uptrend over the last 3 weeks, not really making any progress, and some volatility has picked up lately. Check the trend gauge in the upper right. We've got the four green arrows, which is what we want, not unanimous, so to speak, as we've got a yellow sub arrow under leadership. A bunch of the recent leaders tied to AI data centers have taken it on the chin after Dell's underwhelming earnings report last Thursday. Some of that selling continued today. Others filling in for it, but you like your leadership to be a little bit less volatile and a little bit more reliable than seeing something like CrowdStrike, a big leader in cybersecurity, form a fantastic base and then just completely come apart in 3 days because somebody else or another stock, cousin stock to it, uh, reported underwhelming earnings, but um, still holding up fine for the most part. Plenty of candidates for the 21 over 21 list. Short-term trend, this is against the 21-day exponential moving average. The Dow firmly below that level. Mid caps playing ping pong with that level. The other three indexes above it. So we'll give it the benefit of the doubt with the green arrow, yellow sub arrow as well. Medium term, just the Dow below the 50-day moving average. So yellow sub arrow there. All five of the indexes, however, above the long-term 200-day moving average, and the market never gets into serious trouble as long as the indexes stay above that level. Below there, you're at risk for a bear market. All bear markets historically occur below that level. So what happened today? Second straight day of the following action with a gap up in the morning, followed by a top put in within the first 30 minutes, hard selling in the morning, and then just turning on a dime and rallying into the close. We saw it on Friday with an undercut of the 21-day moving average and a reclaim by the end of the day. We saw it again today with an undercut of the 21-day moving average and a reclaim by the end of today. I'm talking really specifically about the NASDAQ 100 and the S&P 500 here, as the big eight are dominating the action of those two indexes. Here are the final numbers, 21 over 21 leaders list. I'll discuss the three changes this week in a minute. Up fractionally, 10 up, 10 down, and one sideways, or basically unchanged. So not great action there, but again, so-so action, and the ones that drug it down were primarily related to AI data centers. The big eight up an average of 0.87%, led by NVIDIA, which was up 4.9%. RG8, this is our eight growth ETF composite, down about 1/3%. S&P 500 opened up almost 0.4%, immediately started selling off, was down over 0.5% before the afternoon rally kicked in, and more squeezing right into the close. Not as intense as Friday, but still those last 10 minutes, really the last 5 minutes, some serious strength. Closing up positive 0.11%. Equal weight, however, no breadth in this today, down by 0.5%. NASDAQ 100 up 0.5%. Equal weight NASDAQ, however, down 0.15%. Then these three red indexes, the Dow down 1/3%. The mid caps down 0.77%. Russell 2000 small cap down 0.5%. Global 60/40 diversified stock bond yields came off. We'll talk about why in a minute. Up 1/3%. Our flagship portfolio, GROTECTION, up slightly positively on the day. Several outperformers, several underperformers. We'll go through the portfolio as we always do. Let's start off with the S&P 500, and let's go to a 5-minute chart, and you can see here really what I've been talking about, and that's with Friday's gap up, was on that was on some economic data. That was on PCE inflation data, which was in line. But again, within the first 20 minutes, we topped and then a harsh sell off and then an abrupt V-shaped hammer put in and rallying into the rest of the afternoon and then a strong squeeze into the close. A lot of rebalancing happens at month end and pile onto that there was a very big market on close buy order. And that's what really goosed the returns on late Friday afternoon. So then, of course, the question was, were they artificial? We were led to believe they weren't with the gap up open, but again, that lasted about 20 minutes, and then we started selling off. Again, a pretty harsh sell-off from over 1%, from up 0.5% to down 0.5%, and then again, an abrupt hammer. And where did we pull down to? Right to the level where we started to squeeze into the close on Friday. Always look left for reference points around that level. And you could see if you look left that this 5240-ish level has played a combination support resistance level. And that's often a recent spot. That's often a spot where you can look to see if you're going to get any sort of support. And in this case, 5240, we started bouncing around there and then undercut and reclaimed it. Trended up into the close and then a bit of a squeeze the last 10 minutes. All in all, what this means is that the bears have tried very hard the last 2 days to try to take the market down and have been unsuccessful both times. So, despite the fact that we broke below this tight range that we were in after the CPI gap up on May 15th, we've just really been playing around inside this big consolidation level and failed break out and several failed breaks lower. Eventually, this will resolve into a trend one way or the other. For now, we're not playing it very heavy. We've got our rules which say as long as we're above the 50 and the 21, there's a minimum allocation that we need to have to the market so that we keep our opinions out of the way and just stay in trend with what the market is actually doing. So there's the S&P 500. Let's move on to the NASDAQ 100. Very similar. Undercut the 21 Friday, reclaim it today, just barely undercutting the 21 and reclaiming it. Again, bears trying to take control, unable to. They are in control of the Dow, however. This 38,000 level is holding, but we're below the declining 21-day and 50-day moving average there, and relative strength continues to lag. The S&P 400 mid cap index can't stay above the 21 or below for more than a day or two, reclaiming it Friday, back below it today. So now it's stuck between the 21 and the 50-day moving average, and the averages are kind of flat. They really don't serve as support, significant support or resistance. Moving averages are more play a bigger role when they are a pullback to them in the direction of the primary trend. And when they break, it's kind of significant, but when they're flat, not as big, not as reliable as we would like them to be. Very similar action here to the Russell 2000, which is, really just in a 2-week consolidation here. The 50-day moving average playing a bit of a role for support, but the 21 above, below, above, below. So those are the 5 major indexes. Let's move on to the VIX. And the VIX down on the day, or I'm sorry, up on the day, but closing at the low end of the range, below that 16 level where we like to see it, but somewhat volatile over the last couple of days. The range on the S&P has been above 1% each of the last 2 days, which is slightly above average. 10 o'clock today, some ISM data came out indicating contraction in the economy, and that hit the dollar, and it also hit interest rates. You can see here right at, let's go to a 5-minute chart. It's pretty obvious. Dollar weakness right at 10 o'clock when that data came out. There's the dollar. We'll show rates momentarily. The order we normally go in is next is precious metals. Gold up a little less than 1% on the day. Gold stocks up 0.6%. Silver up about 0.5%, and Bitcoin up 2.3%. Now on to bonds. Broad bond index prices up, in this case by 0.25%. That means yields on average down. TLT up 1.3%. That means the long bond yield down quite a bit. And you can see a 3-day waterfall here after two big up days. So basically, we had two big up days. Yields popped and completely undone by 3 down days. Market can't really decide what it wants. Out of bond yields down 2.2% on the 30-year, and the 10-year down 2.48%. Same situation, 2 days up. Oh, are we going to break out? No, we're not. We bought TBT here as it attempted to go higher and got stopped out on the rest of that today. It's okay. Small losses. A strong trend fixes all those small losses. That's our inter-asset correlation chart section. Let's go to the tail of the tape. There, the news there, the manufacturing index that dumped yields and dumped the dollar. I didn't show how the TLT dumped on 5-minute chart, but take my word for it. You can see here how, TLT popped, which means yields dropped. Very obvious there. So economic weakness is still being addressed by the markets. Day count up 2, back above the 80 EMA, second day above the 21 EMA on the S&P 500 after 2 attempts to break it down, to undercut and reclaim, which is a win for the bulls. As far as sectors go, XLC, K, and V, that's communication services, tech, and medical. To the downside, or I'm sorry, to the upside, along with biotechs. To the downside, oils, banks, cybersecurity again, and a host of sectors to the downside. Portfolio, TBT stopped on that. Actually, happy to be stopped on that because rising rates are a headwind to stock. So that was kind of a hedge. And if we got stopped out, we were fine with it. Repurchasing SSO with the reclaim of the 21-day moving average. We trimmed some of that last week, bought back into it today. Getting back in right when you reclaim the 21, especially if you undercut and reclaim it, is as low a risk entry as you could possibly get. And the risk reward is really skewed to the upside. And we like to put the pedal down on the leveraged ETFs when they reclaim that 21-day moving average after some tests lower. We also bought small starter positions in ON and ELF. Bottom line on the day, second straight day of a gap up, followed by morning weakness and then strength into the close. Bears tried their best the last 2 days to take control, but were unable to do it. Let's go to the 21 over 21 list. And I mentioned last week that 3 would be coming out because of their performance. And those 3 were CrowdStrike, followed through to the downside today. The second one was Nutanix, which just had just a terrible reaction to earnings and continues to follow through on the downside. And the third one was going to be Spotify with a close below the 21, and we got stopped in our position. But this morning, they raised prices. Not a lot of companies in this economic environment are confident enough to be able to raise the cost of their products, and Spotify did raise the price for a premium that's going to hit their revenues positively, also their earnings. So you can see the gap up there, up 5.7%, above average volume. The volume pattern is very healthy on this. We haven't repurchased it, but we're keeping an eye on it. But with that action, we put it back on the list. And TBT we took off instead with the further deterioration in rates. The 2 others that we added, first one, Coherent. Now, this is an AI infrastructure play that basically gapped up on its 2 earnings reports ago, went a little bit higher, formed a base, had a gap up and then reversal on its last earnings report. But they announced the new CEO today, and he's very highly thought of in the industry, and that was enough. We're always looking for the N in CanSlim. something new. It can be a new product, new business conditions, in this case, a new CEO. Uh, Worked out very well for the stock today, up 23% on almost 500% average volume. So Coherent back on our 21 over 21 list. I mentioned Spotify also added the third one. We'll get to it in a minute, and it was something that we purchased today. So there's Spotify, still not back in it, but that looks just fine. We're looking at these in order of how strong they were today. And Elf, we bought that and put that on the list over the weekend as well. So that was the third ad. Elf up 5% on the day. Nvidia continues to rock, bouncing off the 8 last week, up another $5 after hours, up 4.9% today. Micron bounced at the 21 today. IBIT continues to look good. Abercrombie consolidating after its earnings report. AppLovin undercut but reclaimed the 21. GDX holding the 21. First Solar consolidating near the top of its range. Howmet continues to consolidate. Goldman Sachs holding on to that 21. Pure Storage bounced at the 21. Can't get it going after initially gapping on its earnings report. FCX continues to fight right around that 21-day moving average level, as does PDD. Vertiv closing up below the 21 after undercutting and reclaiming it today. Keeping an eye on that. We've reduced our position significantly. We need that to get back above the 21 day. It did bounce near the 50 day, near the 10-week today. Didn't quite make it to the 50-day. TMDX undercut and reclaimed the 21-day today. CCJ looking fine, pulled back to the 8 EMA. Here's ON. A leader, we used the 60-minute stochastic cross buy signal on this as it bounced off the 8 EMA to take a small starter position. And finally, CEG, I don't know, is that finally? CEG also closing below the 21-day, bouncing right near the 10-week as well. We've reduced our position in this as well. Kava downgraded today, but bounced at the 8-day exponential moving average. And that is the 21 over 21 list that will show the returns for throughout this week. As always, like to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. Our flagship portfolio is named GROTECTION. It is designed with a dual mandate to grow assets during uptrends and pull back when the trend starts to bend, such as we did last week, such as we did early in April. The market stops going down and bounces at significant levels, we will re-engage, such as we did today, and as we did in late April, early May, for that little 3-week rally that we saw, but now going sideways over the past 3 weeks as well. We've got rules for just about everything that you can see in the market. Keep following us. We touch on them at all times during these videos. From one time to another, we always discuss what they are. And we're going to do an evergreen show within the next 2 weeks on the way we just run things here at Revere, including a bunch of our rules. So keep an eye out for that. Interested in becoming a client? Email my partner, Dan Stewart. That's dan@revereasset.com. And with that, I'll wrap up the video for Monday, June 3rd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.